Good job.
And we actually have two CEOs because one dropped and then came back in. So
That was me.
Okay, cool.
I got 2 brown guys.
So let's start with introducing yourself, who you are, where you work today, size of your team and company, and we have an icebreaker. Do you keep a personal budget? Are you efficient with your own personal finances? And if so, what do you use? Let's start with Sahil, who just got here, so I'm going to put him on the spot.
I don't think this.
Okay, you take this one.
Okay, sounds good. Hey everyone, I'm Sahil. Nice to meet you all. So I run a company called Bravado, which is a professional network for sales. I think the reason I'm on here is not because of the company I run, but maybe the membership that I serve. So we've got about 100,000 VPs of sales and CROs and about 300,000 AEs that are members of Bravado. So I get to see a lot of challenges that we'll face in terms of revenue attribution, generally hitting quota, et cetera, et cetera. In terms of personal finance, I would confess that I am extremely poor at managing both my personal and my company finances, which is why in both sections I have hired, one of the first hires I made at Bravado was an extremely diligent, accountable, measure every last cent and every last dollar VP of finance, who also sits on the board, as keeps us accountable, spends an inordinate amount of her energy yelling at me. And my wife is a VC, and so she's very good with a finance background, and so she's also very good at this. So I've surrounded myself with people who actually know how to manage money, because I'm a sales guy and I know how to make it, and I know how to spend it, but I don't know how to save it.
Sahil invested in us, and he was like, I'm going to give you money, but not really until my wife approves it.
That's true. What I lack in decision power, I make up for in enthusiasm.
Okay. Sahil is always a difficult act to follow. My name is Rish. We're a company called Spot AI. We do video AI for security cameras. It sounds really boring. We work with really unsexy industries like manufacturing, warehousing, retail, services, physical movement of people, objects, and things like that. We are about 120 people, serve about over 1,000 customers across the country. I think I'm here because Sahil almost bailed out and came back, and then she needed another CEO to kind of step in and save the day. So
I'm the worst, in case you haven't.
And then personal finances. I use Excel. I think how most of us probably manage revenue attribution in our companies is through some 7 Excel files which you can never find. I try to use it. I don't know where it is, but yeah.
You're very efficient with your personal finances from previous experiences.
Well, as a founder salary, you have to be kind of somewhat efficient. Not everybody in the weeks in life.
Yeah, that's true.
Very well. Lesson 1.
Well, hi everybody, thanks for having me. My name is Michelle Kim, and I am co-founder and VP of Marketing and GTM Ops at a company called Refersion by Pantastic. We acquired it. We're a leader in the affiliate marketing space, so trusted by 7,000 brands. I run a small team at this company. We're primarily in the SMB big market space, but previous to my experience here, on the big side, I've been at Salesforce and Intel. I was head of demand generation field marketing at Okta prior to the IPO, VP of marketing at Amplitude, companies like Collabnet, Roku, Mastery. So I think all of those things that I hopefully will add a little bit of perspective and get a little bit of teach, and that you guys might hopefully will learn something from something that I have to say. But let's see, the personal finance one. So maybe I'm somewhere in between you guys. So I definitely, yes, I'm not married to a VC, but I do kind of keep an eye on things, and then I end up just pulling it into sheets. Not Excel, but sheets.
Sheets is better.
Not for now.
For
when are you doing like that? You know?
Sales stuff, okay, share with your family.
Sales leader.
I'm like, yeah, to make sure that it works.
Hold it up. Hi, everyone. I am Tomer. I am the VP of Sales at Vercel. We are a cloud infrastructure company, also the creators of like a very popular open source framework, Next.js, for building web apps. 530 people. I think my team is 140 people. And let's see, what is the, budgeting? Yes, I just look at my credit card statement and flagellate myself if it's too high. And an occasional bit of docs, but like usually just, flagellation, yeah. And just deep guilt for overspending.
You're also
Jewish.
a sales leader.
Guilt goes a very long way, you know?
Amazing.
I'm Nick. Nice to meet you all. I run revenue operations at a company called Clumio. We're in the infrastructure and ransomware recovery space. I've done that previously at Branch and at Segment through the Twilio acquisition and a couple other places. It's what I enjoy doing, and so I think I probably bring the perspective of the hey, how do we take sales and marketing and customer success and the CEO and CFO and figure out how to make that all into something that works. So I spend a lot of my time doing that. From a personal finance standpoint, probably maybe unsurprisingly given my role, I maintain a 5-year cash flow spreadsheet for our family. And I update it every month, and so that is how I manage our family's finances. Looking forward to this.
Okay, amazing. Should all learn. We will please send us the template after.
The template. This is the most valuable.
And I will share it with the audience if you actually share it with me. Okay, so let's go about revenue, driving revenue. We have different teams. Even you guys are both CEOs, but Rish, you were previously COO, you come from sales. What do you think your role and your team role is in driving revenue growth, and how do you think about it when it comes to efficiency?
I think as a sales leader, this is a pretty obvious one. It's top line revenue. But we also pay attention to a lot of other metrics. We have our own GTM efficiency metrics and also NDR. So my job is to keep the hockey stick growing up to the right, not burn too much cash.
What's working well right now?
A lot of things are working well. So we have a newly built SDR function that's doing really well and is really productive. Events work really well for us from a pipe gen perspective. And also we make a ton of investments in the open source community, which has also really helped drive pipeline and awareness for Vercel at large.
What's your SDR? Can you talk about that?
Yeah, so some context, Vercel, we have it's probably 5 million Next.js developers. And so a lot of the big target companies use Next.js in some way, shape, or form. And so I call it outbound light because they've adopted some version of the product that we use. What we found is actually the best time to capture new customers is not when they've already implemented or self-hosted our framework, but when they're considering it. So we do a lot of tracking on our community and docs pages. We use tools like Common Room to also give us signals when people interact with our community, and then that triggers outreach, and that's also worked really, really well for us.
Who else?
So really,
What's your role right now in driving revenue? Is it just is it just pipeline? Do you think about beyond pipeline? And what's working right now well?
so we're predominantly self-serve, and we have a direct sales team as well. It's really small, but it's all inbound, right? So marketing has a huge impact on what we do. It's all inbound, and I think part of the reason we have it like that is we find that is the most efficient way. We have tried other things and added other salespeople and SDRs, but we weren't able to get that efficiency number quite right. So we have peeled back on that, and I made it, I think, the most efficient way we can and more of an inbound. The thing that's driving, I think, the most pipeline for us is actually paid media at our company. So we were talking about this earlier. At some of the companies I've worked at, more on the enterprise side, it hasn't been as effective. But here, because we are more lower mid-market and SMB, we find it to be incredibly effective. And we really look at ROI right? So when we also
How
look
do you
at
measure ROI of paid media?
ROI with media,
Yeah.
like ROAS, like we do like, so that's how we do it. We kind of take the whole equation, and we actually also, we do two calculations on that. We do direct, right? So everything that comes in from all the leads that come in, and then we actually take the blended as well. And I think that that's really important because for any of the people that have looked at some of these numbers, and you've always got, you know, maybe a finance person like, does that really work? And are you making, you know, this right? And does it really bring in, you know, it looks like it's so expensive and it's not as efficient as it should be, or it could be. But I've had different companies. I said, fine, let's just turn it all off and let's see what happens, right? And you see that whole number, not just the stuff that was directly attributed to it, but everything else just dropped. So yeah, so we do it in two ways.
Can I ask you a quick question? What are everyone's roles here? Who here is a founder? Quick second. Who here is a sales leader? Who here is a like operations, like attribution type of leader that was working on PEs? There's some people that raise their hand. Marketing.
Sales guy.
Sorry, I was focusing on the revenue generating professionals. No, I'm kidding. I'm totally kidding. I would say that I would actually the funny story is that I think we as Bravado as a company rely almost exclusively on marketing in order to generate all of our revenue. So as it's a running joke, but Ross Pomerantz, a corporate bro that you guys some of you know, like Ross is our VP of marketing at the company, and it's a joke because he like makes fun of marketing all the time, but he runs marketing at Bravado. But in any case, yeah, in terms of so you asked the question, what is my role in revenue? I guess I want to split that into two parts, which is that's why I was asking the question. I think that one of the things that's funny about revenue attribution, and I think you really illustrated it well, Michelle, is that every channel feeds into the other, and that there's no one channel that is explicitly responsible for it, but being able to see how each of the channels interacts with one another is really interesting. And, you know, we've certainly seen that at Bravado, where every time we throw an event and we send emails out about the event, we get people who didn't attend the event who then engage with our content and then become leads, right? And then every time after we do an event, we send a recap of what we learned at that event, and that also drives leads for the business. So like the event insularly maybe drove like, I don't know, 100K revenue, but then the rest of the network effect around the event might have closed $1 million in revenue. But like we don't do a good job of tracking that, and that's the reason why, with my wife's permission, I invested in Upside. Is that I know this problem intimately, which is that like instinctually you think something's right, but if you can't defend it to your board, if you can't defend it to your CEO, if you can't defend it to, then it's like, well, you can't measure, you can't optimize, or whatever, right? Like, so there's some truth around that. To actually answer your question, which is what is my role around revenue attribution, I think that most companies dramatically underinvest in using their executives as SDRs. I think it's a joke that we actually take the most junior, unskilled, uneducated, relative to my target market member of our team and bring them the responsibility of convincing our most important customer to engage with our brand. That makes no fucking sense. No freaking sense. You know what I mean? But like, no, but seriously, it just makes no sense, right? The hardest thing in the room to do is to come in and like break the ice. Once you know someone, it's easy. Like once you have a relationship with a company, you have a partnership, then it's easy. It's the hard part is the first conversation. And I think most companies have got it totally backwards because we like got drunk on the age of outreach and sales loft and 60K SDRs mass blasting people and thinking that that's the way that you generate top of funnel. And like obviously that's just not true.
Are you the SDR? Like who are the SDRs of Bravado? Yeah,
so the SDRs of Bravado predominantly are myself, our VP of operations, who also is our COO and also is like responsible for partnerships with VCs. So she like runs our VC partnership program, and then Kara, who is our VP of sales. And we probably generate between the three of us like 50 to 60% of the pipeline of the company. And we do that, and the way that we do that is like events, right? Like we come and speak at events. But like if you send an email as the CEO of the company being like, hey, CEO of this other company, hey, VP of sales at Vercel, I see that you are growing a shitload. Do you and I want to chat about whatever? Like the odds that
It's happening right now.
the odds that Tomer wants to talk to me are just much higher than the odds that he wants to talk to a 21-year-old who just graduated 6 days ago. But like companies have got this backwards. I think that we should be using our executive team as frontline reps who are responsible for breaking into accounts and then passing opportunities off to the rest of the team in order to work. And that's how we do it at Bravado.
How about Rish and Nick?
We think about, like a simple equation, we think about how many A's can you, like A's are the people who are basically bringing the money. So how many A's can you add more to the company? And can each A do more? This is the only fundamental equation to grow if you're in any kind of B2B SaaS. We have an inside sales team, direct to our business customers. So when it comes down to can each A make more, it comes down to activity models and seeing actually by channels, certain channels, even if they're getting SQLs, those SQLs are probably not making enough money or are taking too long to close or just requires too many steps. And then these reps are wasting good activity after bad dollars. So how much of that can you eliminate and getting visibility with that? So as a CEO, it's a lot sitting with marketing and sales and trying to understand which of these factors which are the activities which are not leading to the highest bang for the buck. And the other is, if I had to hire 5 more salespeople, what does it need? So obviously you need more pipeline. Does marketing can I go to my marketing data and say, hey, I need 20% more pipeline or 10% more pipeline next month. Can you reliably deliver me that? And do you have an estimate of what that spend would be? And hopefully as I'm adding more people, that spend is going down. If it's constantly going up, then your GTM efficiency is kind of going the wrong way. So to me, it's kind of a mathematical equation which gets balanced. Like that, those are questions as a CEO I ask, and then those questions go to the marketing leaders and RevOps and sales leaders and be like, fundamentally, can we add 5 more people next quarter? What will it take? What are the activity models which we need to kill? Are there certain channels which are just bringing us, they're closing deals, but it takes 6 months to close deals and it's a 10K deal. Is it worth it? So that's how we think about it.
Lots been said. I agree with much of it. I think my role generally is a bit what you were just talking about, Rish, is like it's a big puzzle and it's all interconnected across marketing, sales, customer success in terms of your customer growth. And that's what my team's job is and my job is like how do you put that puzzle together and how do you keep everybody honest? Because a lot of times it's, hey, somebody will say, yeah, I'll hire five more reps and I will make them productive. And you know, in my role, I have to sit there and say, hey man, I don't see it in the data. Like, don't have the accounts, we don't have the lead flow. Like, you're going to incinerate money if you hire 5 more reps right now. So we're not going to do that. And so that tends to be the role that I play in, like how I think about my responsibility for revenue growth is like, it's not just about revenue growth, especially in this market. Is that an efficient way to grow revenue?
Yeah.
Or is it like, yeah, top line will grow, but we're going to increase our burn more, and like that's a problem. That's not gonna work.
So to follow up on that, kind of takes me to the next question. Like the market has shifted, and people are looking a lot more at efficiency versus growth. How have you seen that, and what changes have you made to your teams, either now or in a previous role, to become more efficient? What are a few things, and what also what are the metrics you're looking at? Like I think some of you mentioned metrics. What are those metrics?
Yeah, I'll start with that. So in terms of like how it's changed, I think the best way that I can relate it from personal experience is like 10 years ago plus I was at Box, and that was a very different market environment. And that was like sales capacity is the thing that matters. If you do not hit your hiring goals, I will kill you. And it was so singularly focused on, I have to grow sales capacity. We missed a quarter. Aaron got an email from Mark Benioff that day that was like, hire more AEs, what the fuck are you doing? And so, like, it was all about that, because that was the market. It wasn't about efficiency, it was just about top line growth. And, you know, what we've been talking about, where outbound has gotten progressively harder and continues to, that wasn't the case at that point in time, right? You could spam the world and, like, you could get something for it and it kind of made sense. And so that has obviously shifted materially over the last few years. So as far as like how is it different, that's the real thing. Is it's not about that, right? It's about how do you put it all together. And from a metric standpoint, that's things like magic number, sales efficiency, ARR growth, NRR, you know, all of the standard metrics that we look at. I don't think there's anything that's like crazy or revolutionary in terms of like, oh, there's this like new metric that you should look at that's going to be wildly different. Like, it's all kind of out there and it's all kind of standard. I think it's just people pay far more attention to it now than they used to.
Yeah, I would agree with that. I mean, the market's changed. It doesn't reward growth at all costs like it used to. So, like, obviously there's significant upside for companies that can grow very quickly but can do so efficiently. Our spin on kind of some of the numbers out there that we've kind of aligned on as a company is we call it GEM. It's our GTM efficiency metric. It's basically a magic number, but instead of you know, how much S&M spent leads to top line revenue, it's generating gross profit. So like the reason why we chose gross profit is because it's a cross-functional metric. It means like, are we getting more efficient with our COGS? Is the infrastructure getting more efficient? Are we closing better deals? Those are all things that we're particularly mindful of.
Do people get like comp back to that at all?
I mean, I get grilled on it on a regular basis.
I like your comp.
Not my comp. Not my comp. But my job security is a big part of that. So in turn, but it is also the value of like we're going through the process of IPO readiness. And so there's a lot of scrutiny on efficiency naturally. And so if I want my shares to be worth something, I also ensure that we're efficient and growing in the right ways. But yeah, GTM, the gross profit leaning magic number has worked really well for us because it kind of brings engineering along for the ride. It makes us just a little bit more thoughtful about like, okay, when we're working through product strategy, are these high margin products, are these low margin products? How are we thinking about the lost leaders in our portfolio? We have a really big self-service business. And so we're constantly trying to optimize the trade-offs between like what we want to make available in a self-serve capacity, what we want it to be sales assist, et cetera.
I think I was just going to say I agree with kind of everything that you guys were saying. And I lived through the same experience too when I was at like my Okta days and before, right? It was like add more people. And at the time, from a marketing perspective, it was like, okay, so if we like, how many leads do we need to support this number of reps, right? So the equation was like that, and we really focused on like cost per lead, cost per opportunity, right? Trying to drive some of those things down within like the budget that we had, and then it was like, oh, we can't get there because we can't get those leads. Like, can we have more money? And I don't think it was ever like irresponsible. It was always really tight. But like what you were focused on was different. So fast forward to today, and very similarly, like we really focus on like really, really high efficiency. So back then maybe that was the North Star. So we really focus on, like I said, like ROAS, like return on ad spend, and ROI. And we have this number that we want to keep it at, like, and I look at both blended and unblended, right, and all sorts of variations. But that number is given us by our CFO. Right, and he says like, this is the equation, this is what you got, and you know, if I over excel on one, then I can go try something somewhere else. But that is really kind of the way that's our North Star now.
Awesome. For us, I think the way as a founder I think about it is you have only one job in the near term. Most companies have 2 or 3 years of runway when they're growing. Is in the next 18 or 24 months don't run out of money. That's your number 1, number 2, number 3 job. And you kind of start with that first principle. And it sounds basic, but it is the only job you have. If you don't run out of money, you will succeed. So the way I think about it is, so our business has a unique dynamics when it comes to that, which is we need to sell multi-year contracts, and 75% of our customers pay us cash upfront for those 4-year contracts and 5-year contracts. So we have a unique metric where we think of, I don't really look at a typical magic number because I'm getting a lot more cash than what the VCs might realize. I just have not run out of cash. So we look at what is the cash that our sales engine is bringing in, And then adjusted for, similarly, you like for what the gross margin on that is. That's the net cash that actually stays on the books. And is that funding the entire GTM program or not? If it is, then all my incremental revenue dollars are going to innovation, which is really good, and how long can I provide the runway? So we look at like cash as a very strong dynamic, and different companies might have different cash dynamics depending on what your payment terms are, what you're getting paid, and especially in a market where raising capital could be harder, you start thinking, so we think about cash, and I think when raising capital is easier, you're like, yes, I'll go burn money, and we call it forward investment into the future, and because I can go raise capital again in 12 months or 15 months, so my job is done. I'm not letting the company run out of money. So I think the job doesn't change from the CEO perspective, just the levers that you have available, the toolkit dramatically shifts, and today's toolkit, it's about what are the cash dynamics of your business, how can you extend the cash runway, and what makes that possible?
One more question from the audience, which is around size of company. So who here is from seed to Series B? Okay. Who here is from Series C to larger but not public? Okay. Who here is from a public company? Okay. So the majority of people are early stage in the room. Okay. So the advice is very different, I think, depending on which stage you're in, right? Most of you are not Tomer. Right? No, most of you are not Vercel, which is one of the most successful, hottest companies in the Valley, and you know, the darling of all VCs, and able to raise money wildly because they're super fucking successful. You know, okay, so like, look, the truth is that for most early stage startups, there's nothing to save. I'm going to give a different point of view, just for the sake of giving you the other side of the argument, right? There's actually some wisdom in what they said, and I agree with a lot of it. But I want to give you the other point of view because I think it's important for you to hear it, which is for most of your companies, there's nothing to save, right? You can't cut your way to product market fit. You can't cut your way to acceleration. You can't cut your way to hitting rocket ship growth. And venture funding, which is what the ride that most of us sat in on when we took this job. Venture funding is a ride of exponential growth. So, you know...
I think that's still true today.
I do. I absolutely think it's true. In fact, I think it's more true today than it ever has been because AI and AI agents and stuff have allowed really small teams to actually get to massive runways very, very quickly in a space in which people are spending even more, and you're not competing against your competitors, right? Like when a VC looks at a business, they're not thinking like, oh, Sahil's got a professional network for sales, let me look at the other professional network for sales and see how he's doing. They're like, compared to, I don't know, OpenAI, how's Sahil doing? Right? And it turns out really shitty. So like, so if, you know, like the point is, you need to be able to tell a narrative as a business for why this is the outlier of outlier companies. And there's no story that does not begin with exponential growth. So my point of view, a little different than my co-panelists, is the fact that I think that as an early stage company, there's nothing you should ever sacrifice for trying to get to hockey stick exponential growth. Once you
don't run out of money.
No, I think it's better. So that trade-off seems simple in the abstract, right? Because you say, okay, we've got 12 months of runway. We can.
So would you like cut your runway to 9 months if you can get higher growth?
I would cut my runway to 3 months if I could get higher growth, because the chance of getting higher growth is so rare. And by the way, I lived this story at Bravado, so this isn't a theoretical example. Bravado raised a $20 million Series B in February of 2022. Keep this in the friend EA. Bravado raised a Series B, 20 million, Feb 2022. We had about 11 million of it left at the beginning of this year. And at the beginning of this year, we make money by companies hiring salespeople. And all of a sudden, people really started hiring salespeople, and nobody was fucking hiring salespeople last year or the year before, so we were really struggling as businesses. And so we had two choices. One, I could efficiently try to grow the business and try to like make, or the second thing is I could prove that we were by far the best sales hiring platform in the world and put every dollar into engineering and data science and Gen AI products and build an AI sales recruiter and hire a big sales team and try to go. And so the option was runway of 24 months or runway of 6 months. I took the 6-month option, and we grew revenue 400% the first quarter, 500% the second quarter, and we got 30 term sheets for our Series C, which is closing tomorrow. So like from a point of view of running the playbook, and by the way, we were down to less than a month of runway. So like in terms of running the playbook, but I told every investor the same. I told our board the same thing. I said, "There's nothing to save. You know, like 3 million ARR, this business is fucking worthless. Like who's going to pay anything for it? Let me show you what it looks like when a company gets from 3 million to 30 million in a year." And when you say numbers like that, people are like, "Really? You think you can do that?" Right? It changes the whole. No one's asking about your magic number or your quick ratio or whatever when you're talking about getting from 3 to 30. And so I deeply believe that exponential growth and revenue growth is the only thing that matters pre-Series C. Once you get to product market fit and stuff, I think these numbers matter a lot.
I mean, it's not just, you usually have product market fit by Series A, so you have product market fit.
That's a
Baby,
yeah.
you got two CEOs that disagree with that statement. Yeah, okay.
Inshallah.
I have more questions, but I think let's have a few questions from the audience, and then let's break into groups, and I hope you guys stay